Well, I think with the oil markets, there's a great deal of concern over demand going into the fourth quarter. We saw a bit of a bump middle of the year, prices trending up towards $90 a barrel. We've lost $10 in the space of 2 weeks. Despite some of the positive news that we saw today around Aramco's earnings, let's face it, the company's making a lot of money. I think $19 billion of free cash flow is what I saw. But it's having to pay a lot to the government as well in terms of dividends. And when you're having to pay a $30 billion plus dividend at the same time, there's a mismatch there, right? And the Aramco, Saudi Arabia, the oil industry, probably does need prices a little bit higher to sustain the levels of investment required to replace barrels, to sustain the level of investment that's going to be required to meet future demand.
Yeah, and it's interesting because Aramco also joined Chevron, BP and Exxon in beating expectations. So what we've seen from Q2 from this industry has been broadly positive, but that is despite the fact that we have lower prices. So when you assess the overall trajectory of the market, where do you see oil moving through the second half of the year, the remainder of the year? Because as you have alluded to, there's really no shortage of challenges out there right now.
It's very difficult, I think, going into the fourth quarter. The current economic environment, what you've seen in stock markets in the last 2 days, I think makes it even more complex. Our forecast for the remainder of this year is $84 a barrel Brent. That could be a stretch, in my opinion. And I think that some of the news that you're seeing in the last 2 days around markets and what that feeds through to economies will have an impact. We've got global demand growth of about 1.5, falling million barrels a day, falling next year. And we see overall a weaker oil market in 2025. The big issue that Aramco has to face, and really this is the difference between Aramco and the other international oil majors that you mentioned, is that it's constrained by OPEC. At the end of the day, US oil production, the likes of Chevron, Exxon, they all benefit from this great US oil story at the moment. The US is going to produce north of 13.2 million barrels a day this year. Saudi is constrained. You have 5.8 million barrels a day of OPEC capacity that's on the sidelines. Saudi Arabia has to take the brunt of that. And that's on Aramco's shoulders. So they're in a bit of a corner, really.
Do you expect a strategy shift from OPEC as a result of what we've seen in the market over the last couple of days? You're saying Saudi Arabia does shoulder the burden of the majority of those OPEC plus cuts, but at the same time, seems like they have a pretty effective strategy in place for maintaining market and inventory stability. So do you expect any change moving forward?
I think the market can move very quickly, as we've seen in the last 2 weeks. A big $10 move, which we've seen. OPEC producers can't afford that kind of volatility in oil markets to stretch out a month, 2 months. So, are we going to wait till the end of the year for an official OPEC meeting in December? Yes, you have the JMMCs, they meet on a monthly basis. Do we get an emergency meeting if we get another drop down, if this economic news, the stock market volatility does really start to filter into oil prices, we go down to the low 70s, below $70 a barrel threshold? At what point does OPEC blink? So I think that we are starting to get into that territory where people are going to be asking, does OPEC need to take some action to put a brake under this?